Today we are going to talk about the tax-free savings account, also known as the TFSA. This registered plan was introduced in 2009 as another helpful way for Canadians to save. It has become one of the most popular investment vehicles for reasons we will get to shortly. So, how does it work? The contributions you make are after-tax dollars, meaning you already pay tax on this money either through your employer or a business. Unlike the RSP, you do not receive any sort of tax deduction from your contributions. While your money is within the tax-free savings account, all growth is tax-sheltered, hence the wording tax-free. It's important to note that the type of growth does not matter, whether it's interest, capital appreciation, or dividends. However, if you do hold U.S. dividend-paying stocks inside your TFSA, there is a 15% withholding tax, which automatically goes to the U.S. government, not the Canadian government. Any withdrawals from your TFSA are also tax-free. Again, the reason being that you already pay tax on this money that you contributed to your TFSA. Now, there is a limit on how much you can contribute, which is solely based on your age. It's also important to note that you must be a Canadian resident to receive contribution room. Therefore, if you recently moved to Canada or left Canada for a few years and have come back, you will not receive contribution room while not being a resident of Canada. Here are two examples of how you can calculate your individual contribution room. You can either add up all the years you are 18 or older and a resident of Canada, or assuming you've always lived in Canada, you can simply calculate it by looking at the year you were born. You'll notice in 2015 the contribution room was $10,000. This was because the Conservative government raised the limit. However, the following year the Liberal Party decreased it back. TFSA contribution limits are meant to be indexed with inflation and rounded to the nearest $500. That is why you will see some years as $5,000, $5,500, and recently $6,000. Now, how does your contribution room work? Any unused contribution room is carried forward indefinitely to be used at a later point. Any growth you receive within your tax-free savings account does not count towards your contribution room. Any withdrawals made from your TFSA will be added back to your contribution limit the following year on January 1st. Everyone aged 18 or older will receive the new year's contribution room on January 1st. Now let's look at some examples to explain this a little further. In this first example, Steve has a TFSA contribution room of $20,000 for 2020. He then contributes $5,000 to his tax-free savings account on January 1st, 2020. At the end of the year, his $5,000 has grown to $6,000, which he then withdraws from his TFSA on December 31st, 2020. We will now look at what his contribution will be for 2021. The calculation is as follows. Any unused room plus all withdrawals plus that year's new room contribution. In this case, we know that Steve still has $15,000 of unused room plus the $6,000 he withdrew in 2020 plus the new $6,000 that everyone's 18 or older would have received in 2021. Therefore, Steve will have a contribution room of $27,000 for 2021. In the second example, everything remains the same, except that instead of Steve's $5,000 growing to $6,000, his $5,000 actually loses value and becomes $4,000, which he then still withdraws in 2020. You can see that in this example, his contribution room for 2021 is now $25,000, and by withdrawing the funds at a loss, he will never receive that contribution room back. Now, it is important to note you can open multiple tax-free savings accounts at different institutions. However, your individual contribution limit remains the same, and your total between all tax-free savings accounts cannot exceed your individual contribution limit. Now, you might be asking, because there is a contribution limit, what happens if you exceed that limit? Well, the CRA is going to charge you a 1% penalty each month on the amount that you are over your contribution limit. Therefore, it is very important to make sure you do not exceed your personal contribution limit. The best way to check what your individual tax-free savings contribution limit is by visiting the CRA online account. Keep in mind this is usually only updated once a year and may or may not show an updated number. A common misconception with the tax-free savings account is that it's just a savings account or an investment itself. However, a TFSA is just a vehicle that can hold different types of investments. An easy way to think about it is to think of a TFSA like a bucket. And within this bucket, you can hold several different types of investments, such as a savings account, GICs, ETFs, mutual funds, stocks, and bonds. All of these, obviously, can be held within the tax-free savings account. Because all growth is tax-free, it is a good idea to use the tax-free savings account as a long-term savings plan and try to achieve as much growth as possible. Because whether you make 1% or 10%, the growth is tax-free, and therefore by making more, you are essentially avoiding more taxes. Because the tax-free savings account is a registered plan, you can name beneficiaries or a successor to this plan. Beneficiaries being a person or people who you would like to give your TFSA money to in the event you are to pass away. A successor can only be named for a spouse or common law partner. The difference with a successor is that in the event that you pass away, your TFSA funds can actually go inside their tax-free savings account without affecting their individual contribution room. This is much more beneficial and always the preferred option if naming a spouse or common law partner. That is everything you need to know about the tax-free savings account. If you made it this far in the video, I want to thank you, and please feel free to leave a comment below on any other financial topics you would like covered.